How's everybody doing? What's going on? Welcome to the stream. Almost started there without getting the sound working. Just give me a moment. I'm going to gather myself. Move everything away. Pop the stream out. Move this to the side. Okay. What's going on, guys? How's everybody doing? Give me a sound check real quick before I get into talking for the next 5 minutes and then realize that I don't have any sound. Just give me a heads up when you can hear me. Hopefully you couldn't hear me clear my throat like 30 times in the background. Just waiting for, there's a little bit of a lag. Sound is good, maybe a little low. Let me just double check. I mean, it's up all the way on my end, so take that little knobby thing and just turn it clockwise. That usually does the trick. Or these days, you know, just point your finger at the screen and do that if you got one of those fancy ones. That might just be in my car. Okay, how's everybody doing? Just fix everything. Jesus, I got so many things open right now. Where'd you guys go? Okay, right there. Okay, sound is good. All right, guys, what's going on? For those of you that are new, my name is Ryan, aka Kenrick Clark. You are watching the BlockRoots YouTube channel, yada, yada, yada. I'm sure everyone now knows who we are. We appreciate it if you guys can hit the like button. If you want to know more about us, go ahead and, you know, as they say, check the links below. I think we still have a handful of links that are in the description. So rather than like drown on in the beginning about everything and what our plans are at BlockRoots, we're going to try to get into it as fast as possible. So hopefully you guys have been doing well. One thing that I do want to get a little bit of, let's see, okay, now I can see them. One thing that I do want is I want the like button to be smashed. You know, I hate to say that, but we want the like button to be smashed. It makes us happy at the end of the day. No, we're trying to grow the channel, right? And, you know, I think that we put out great content when we do the streams. We are doing streams few and far between lately, but I rebranded the show and it's called The Desk, right? As in the trading desk. And our primary focus is going to be on the crypto markets. And obviously we're going to touch on traditional markets as well when the time is fit. And I think that this week is clearly a good time to quickly go over that. Don't want to get too far into that. But we rebranded the show, going back to doing it more consistently. And yeah, so appreciate everyone who hops in. And if you go ahead and hit that like button, I see that we have a bunch of viewers, but the likes are not quite there. They're not quite there. Okay. So let me say hi to everybody. Let me just pop the chat out. I don't think I need to pay attention to the stream health anymore. I'm going to go ahead and make my head a little bit smaller. I'm also going to turn off my, I think I'm good, right? With all exchanges, I'm going to turn off my VPN. So if there's a slight lag for 1 second, just give it a moment. Pull this over here. We don't need to look at TweetDeck. Connected, what's going on? Cornholio, Crypto, Sam, Logan, okay, Drachma, Capital, DCB, PR, Continuation, all right, Ross, what's going on? Jay Smith, LP, Jack, Carlos Fuentes, Banga, what's going on, buddy? David, okay, all right, Mi Hero, you're my hero. What's going on? Stom, what's up, buddy? Mash, Randall, Mark Jackson. I don't know why, Mark, but when I was reading your name, I thought Hugh Jackman. I don't know. Okay, maybe it's because I just read Me Hero and I was thinking of My Hero, and then I saw Mark Jackson and I thought of My Hero, Wolverine, right? Okay. I think in an effort to not be redundant, oh, we got some other people at the bottom too. Mash, Be Modular. Be Modular. It's warming up in the city. Today was kind of warm. But apparently we're supposed to have a ridiculous wind chill tonight. So if you're in New York, I'm sure you share that. So SNX, Aave, retrace 50%. What do you think about gas strapped ETH, DeFi blue chips? Yeah, that definitely is something that is, it's a big hindrance, right, to a lot of the assets that are on the ETH network. but we'll go over that in a second. What's going on, Dave, Ben? All right, so real quick, we're gonna just talk about what occurred this week. We're gonna get away from TweetDeck, and I think that this is really important because there's a constant back and forth as to whether or not equities and BTC are correlated. When we're paying attention to correlations, when I'm paying attention to correlations, I'm paying attention to the ES. So I look at the E-mini S&P. Some people like to look at the NASDAQ. I think that maybe the NASDAQ is maybe a closer representation of crypto than the E-mini, even though they're, it's equities either way, but the NASDAQ it's your top 100 in the NASDAQ. The NASDAQ is like 50, 60, maybe 55% tech, no financials, riskier stuff, higher beta. So the NASDAQ compared to the S&P, the S&P 500, that's going to be a much broader representation of the market. And that is essentially the equity benchmark. The NASDAQ is like the higher beta benchmark. Think about it like that. Okay. So a lot of people have gone back and forth and talking about whether or not, it's the NQ that's correlated to BTC, it's ES. Well, the ES and the NQ, they're correlated to each other too. Okay. You don't really see a lot of behavior where one is doing something that the other isn't. You normally just see that, there is a higher beta relationship between the ES and the NQ. So if you think about like the ES having the S, when I say the ES, I'm talking about the S&P. If you were to look at the S&P and say that is the benchmark, and benchmark is a beta of 1, well then maybe the NASDAQ is a beta of 1.2, 1.5, 2. Not sure exactly what it would be, but it is mostly composed of tech stocks. A majority of that is composed of tech stocks, and they tend to be higher beta. And it's not like they do have the large representation of the indices, right, that weigh more, or that add more to that weighting, but there's also a lot of smaller stuff too. So the ES, again, that's just the chart that I look at. It's the futures chart, but it's a representation of the S&P 500. It's the S&P 500 futures, all right, the E-mini contracts. Now, there are times when equities are correlated to BTC. I think that one thing that we have to understand now is that Bitcoin is it's a macro asset now. Okay. It has a lot of different narratives that it satisfies. And a lot of the times I feel like they're convenient narratives for when the time is right for it to sort of be a chameleon and act like a, risk off asset, or now it's a risk on asset. Now it's a play on equities. Now it's acting like a tech stock. Now it's a store of value. Now it's gold 2.0. There's a lot of these different narratives. I think that one thing that is just clear is it's a larger asset now. It's, $1 trillion. We're talking about now $1 trillion market cap, right? So, and I'm not sure if it's still at that threshold, but this is definitely a macro asset, right? And there are corporate balance sheets, there are larger institutional players that have gotten involved, and when something becomes a macro asset, it gets basketed with other macro assets. So just by that alone, just by the asset managers that, let's say, are basketing Bitcoin with another basket of goods, that's going to create a correlation. That's going to create strong correlations to, let's say, maybe equities, right? Maybe a fund manager is thinking, I'm not really maybe behind the whole idea of Bitcoin being, gold 2.0, or, the currency of the future, or yada, 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 an incredible hedge against inflation. Maybe I'm just thinking that Bitcoin is a higher beta play right now, right? And it's a risk on environment. As long as the risk-free rate doesn't start going up, equities are not really expensive, right? Equities would be seen as expensive if the risk-free rate continued to rise. So if we continue to see like that the Fed didn't stomp out the 10-year rate and it continued to go up at the same rate that it is, which is one of the more important things that makes this a little bit of shaky ground, is how fast the 10-year is moving, or moved, okay, because this was last week. Now, they might add Bitcoin to that type of basket, risk on basket, high beta approach. And they are going to be not just getting in and out of Bitcoin per se. They're going to be adding this to a basket of goods, again, like I said. So it's going to be correlated to the larger markets now. right? It's just, that's the way it is. Like, there's no way around it. Like, you don't, in this day and age, and technology is one of the reasons why things are correlated, because the ease of getting in and out and reinforcing either correlations or non-correlations, right? Or excuse me, positive or inverse correlations. I said this before, you know, if you're on a traditional brokerage platform, one of the reasons why Bitcoin, and this might be knowledge to people, this might be knowledge to some people who haven't said this before and are new to the stream. One of the reasons why Bitcoin was so uncorrelated for the longest time is, one, because it's too small. You know, you could sneeze at it and make it move. So there weren't a lot of people that were, you know, involved in the market whatsoever from the traditional side, from legacy. And two, it's also not connected to legacy brokerage platforms. You know, you could be on like TD Ameritrade, Charles Schwab, E-Trade, and you can, let's say, you know, the market is having a larger pullback in equities, you can immediately get into fixed income. You can immediately get into gold, commodities, right? Whatever your sort of safety asset is, right? If there even is one anymore that's no longer correlated in some way. So there is this immediacy from being connected on the same platform. Bitcoin was not like that, right? I mean, it's only starting to become more and more like that, you know, with GBTC and, you know, now with futures, but you couldn't immediately, you know, get out of one and into the other the same way that you can in traditional markets. So that's just one of the reasons. But either way, you know, again, the whole thing is like, people fuss over, well, the correlation isn't there all the time. You know, I've always said, you know, I think Bitcoin is, if you look at traditional markets, I think Bitcoin's correlated to overall levels of liquidity, right? I think it's definitely a risk-on asset most of the time. It's sort of now just becoming, or starting to become, this self-fulfilling prophecy of it being a store of value and a hedge against inflation. Like, that's all kind of new. It definitely first was seen as like, I want to touch it with a stick, it's risky, right? And the people that got in early were rewarded, right? They were paid that risk premium for taking that risk. So there might not be like this crazy long-term correlation, but the fact of the matter is, and for the way that I trade, 90% of my trading, when the correlation shows up, it's like you can't turn a blind eye to it. It's there, and if you are not addressing it, that it exists, you're being negligent, right? So I can't be negligent with my trading. You can't be negligent with your trading. So it's really important that when there are these, and I'll say traditional market events, because we almost had a traditional market event last week. And I say event, and that's, you know, I don't want to throw the term tail risk around too much, but there was a good amount of risk on the table last week. You know, we had within I think a 2-week period, or maybe even 1 week period, I can't remember. We had 2 standard deviation events, I believe, in traditional markets in the S&P, back to back. So it was kind of a rough past 2 weeks. And Bitcoin, you know, last week when yields rose rapidly, right? that was very shaky for traditional markets. And you just have to, like, there's you know, an interesting relationship between rates, between bonds, between equities. It's not something that, you know, you could just open up Wikipedia and understand completely, but just think about it this way. You know, for the longest time, the yields have been really low. Okay, so yields are low, right? Now the risk-free rate is really low. Okay, if the yields start to rise, right? People fleeing bonds, right? They're afraid of inflation. You know, those rates are really not going to be, those real rates are not going to exceed the level of inflation. There's a whole other argument for whether or not there will actually be inflation. Again, not going to go down these pipelines. But when people are looking for yield over the last year, almost at a couple months, they haven't been able to find it in bonds, right? So they are going and searching for yield in every kind of corner, right? So equities, you know, crypto benefited from it. So when yields start to rise again, right, the risk-free rate rises, and it makes equities look more expensive, right? Especially equities that maybe don't have the most attractive earnings to cash flow, okay? So whenever that happens, you know, there's a tendency to flee to the thing that is, I'd say, a little bit more guaranteed. There's a very interesting dynamic that takes place. The fact of the matter is, and why I don't want to get too far into this, is because it's not like Bitcoin hasn't performed well in high yield environment, or what has been like more of the norm. And we're going back like a couple of years ago, 2.5, 3%, maybe 10 years ago, I think it was like 5%. So Bitcoin did completely fine in 2017. You know, it didn't have a problem then. And we've seen that kind of, you know, bonds have been like slowly just dying off over time either way. Which there's a whole nother argument for whether or not Bitcoin is like going to benefit from a bond exodus. But either way, like if rates begin to rise really rapidly, that's an attractive thing to get into because for the longest time, or bonds are an attractive thing to get into because for the longest time, you know, there was no, the risk-free rate was so low. And just think about it, it's risk-free, right? The concept of being risk-free. That does become more attractive. Now you have people like Warren Buffett, Jamie Dimon saying, you know, don't, you know, stay away from bonds, yada, yada, yada. But there's a lot of very interesting relationships, and the equities and yields relationship is one of them that you have to keep an eye on. And again, this caused an event or series of events last week, and Bitcoin became sort of tick for tick correlated to the S&P. All right, and to cap this off, you have to be mindful of like what the theme is, right? If you're approaching the chart, if you're approaching inverse correlation, yeah. If you're approaching the, you know, chart every morning, every week, it doesn't matter, you know, what is the theme? Well, the last week, you know, the last couple of days of last week, the theme was that, you know, yields were rising, equities were getting hammered, there's a lot of uncertainty in the market, and Bitcoin was heavily correlated to the S&P. So that has to be sort of priority number one, regardless of what your intentions are, right? You know, and I'd say that this probably doesn't affect people who are long-term holders of BTC, but if you're actively trading the markets, you really have to be aware of like what the you know, what the current weather is. We'll call it that. So that being said, just wanted to get that out of the way. See if anyone said anything in there that I should pick up on. If Bitcoin gets an ETF, that would not allow retail US. No, yeah, I don't know if that's going to have a tremendous impact on the market, honestly. Let's see. So, you know, we could see the United States is not very friendly to crypto in general, but I think it's just it's going to be a long process. Okay, so let's take a look at the chart. Take a look at BTC. And one thing that I said last week, and I said this a couple times, always keep an eye on the VIX. You know, when the VIX is elevated, equities are typically getting hammered, or if they're not getting hammered, they're in a touchy spot, and Bitcoin is probably going to be in a touchy spot as well. ESCO, so just, you know, just basic game theory, and I posted this today. Michael Saylor talked to a bunch of corporations. You know, he can't say things for certain reasons. We have non-disclosure agreements, traditional asset managers and investment managers. There's a lot of red tape to integrate BTC, to integrate crypto, right? To be able to offer that to their clients or create some type of vehicle. So think about it. If he talked to a lot of larger players in the space and he is still adamant about buying at these prices, I would say that if you talk to 1,000 people, he probably got 5 people that immediately he knows that are entering the market in the next couple months. So I think that you have to think that way. He can't say things, you know, he can't say things outright, but he can very well, you know, speak through his actions, right? Sort of silent agreement. What's that called? Acquiescence, silent acknowledgement. So I think that his actions alone are, you know, an indication that he is privy to some information that we're not, and he cannot divulge, and he's consistently buying. So, you know, if you look at this, you know, if you look at the Twitter news today about them offering a convertible note, which is, you know, something that can be that is debt that can be issued or redeemed for equity, 1.2 billion. I think the intentions with that are probably to do the same thing that Saylor did for Twitter. So I want to look at BTC though. I don't want to, you know, go off on this for a long time. Traditional bonds are not my thing. All right, so I'm not like I don't want to act like a bond trader. There's a whole lot of complexity when it comes to that. But first things first, let's get to BTC. You know, after a big, of course we're going to look at ETH. After big sell-offs, guys. All right, so after we have a big sell-off like this, let me just change my ink, make it pink today. After we have something like this, I always say, you know, you're always going to get a reversion. Okay, if you're early into it, right, holding might cost you some, but if we're already 20% into a pullback around here, 27% I think was around here, if you're already past, I'll just say like that 20% threshold, honestly, your best bet is to, and I want to say just, this is by no means, this is not financial advice. I'm not tailoring this to anybody, but a lot of the times the market will revert, okay? Mean reversion is mean, all right? So when the market has a massive move down south, right, a big pullback like this, that is 3-4 times the normal standard deviation of movements that we've had preceding that, that is something that is going to get very imbalanced. You're going to see a lot of crowding into that position. You're going to see a lot of crowding into those lows by people that not only are panicking and getting out of position, but by people who are thinking like, I'm just going to short the market here and it's going to have a major nuke. So you get a big imbalance, and then ultimately what happens is you get a reversion, right? So price reverts back to the mean. After a 20% move, what is our threshold for BTC? It's like, what, 40% we've had, I'm talking about in a small amount of time. Going back to 2017, 16, what was it like? 40% pullback, aside from the March crash, right? Aside from 2018, I'm talking about in a trend, the type of, impulsive corrective behavior. So if it's between 20 and 40, like that's a big window. But, if it typically falls between 25 and 35, and you're at, 20%, well, odds are you could hold off for better weather. All right, that's the best way I could put it. Like I know myself, whenever we have a large pullback and we're kind of dangling, and it feels painful, and if I didn't hedge it, if I didn't get out, if I didn't sell my position, which I haven't been doing that either way. I sold some BTC, but I haven't been like trying to get in and out and time this thing perfectly with my stack whatsoever. Most of it's in cold storage. If you haven't done that, a lot of the times you're better off stepping away from the chart. All right, rather than panicking, because more often than not, you're going to see that price is going to correct, and if it's not going to correct, if it's not going to correct immediately over the next week or two, next week I would say, you normally get a correction. And a lot of the times what happens is, and I don't want to say that because that sounded so like over the next week expect a correction. Let me rephrase all this. Whenever you do have a correction and you don't have your weekly candle closed yet and you have a correction in progress, you're so focused on it on the low time frame, you forget that the majority of the time that you have higher time frame corrections like this, price is going to try to make its way back up here on another weekly candle, right? So you're going to have a correction that, a week might pass, 2 weeks might pass, but more often than not, you're going to make an attempt at least back at the halfway point. So that's just one thing to always consider, so that you don't really just panic in a very hasty way, exit, and then realize, every time you do this, that the market is, coming back to a more favorable location that you could exit at in the future, at a future date, right? The structure preceding this breakdown, okay, is not the type of structure that you want to really see get tested, honestly. So that's another thing to focus on. This type of structure, this type of consolidation that is kind of forming a pennant upward. You get a break from this, not really much showing you from there. You get a retest, big move up. This is not the kind of structure you want to see get retested to the downside either way. That's why you get this type of, flush. So that's the best way to describe it. Because the entire way up, you have a really weak looking structure. Now, you might ask, why is it weak? A better structure is one that is built, I'll just say, more within a sideways range. More within a sideways range, we have lows tested multiple times, we have highs tested multiple times. These are fortified levels. With this, you have highs that are slightly higher, you have lows that are slightly higher. So just think about it this way, under each one of these lows, it's really been unexplored, right? So very comfortable, sort of trailing stop type people move their stop up, sitting comfortably in this position, thinking that they're, out of the crosshairs. The problem with this kind of structure that has no interruption, right? 1, 2, 3, 4. This one is interrupted. Is that you have these clusters, these pockets of stops, and all it takes is the first one to get hit to flush the rest, right? A lot of the times. So you have an imbalanced structure. It's not built properly. It's sort of, it's built more vertically than anything else. So when you see a structure that looks like this, all right, it's not one that I would be looking to bid back on this retest or back on this retest. I'd wait for the lows to get cleaned before even wanting to get involved, okay? So it brings us to where we currently are right now. I am, obviously I'm long-term bullish on Bitcoin. I don't think that, one sec, just make sure that this is going to pop up on the chart. It's red. I want to make it a little bit lighter. I don't think that we're going to just start trending again, honestly. Okay, so I would consider this as the first significant low. We have a significant high in terms of market structure. First levels first. Okay, so weekly low now. Okay, that we just put in. All right, now going to the daily. See, these are actually the same exact as the daily. So your daily low is close, your weekly high is close. I think that it's much more likely that we go on to put in some type of ranging behavior. This has been a very strong trend, right? And so now we've had back-to-back sell-offs that are within close proximity. I don't think that this sell-off was, aside from this flush, right, that just really just took all of this liquidity down here and it was kind of a cascade. I think that a lot of this selling was, while it was relentless, it was pretty orderly. So that's the best way I could put it. It was pretty orderly. We didn't see, in the beginning, we didn't have a discount. We didn't have a neutral funding the way that you would want to have seen, right? So it's easy to get bullish on the initial bounce, but you start to see derivatives get really aggressive right away. This kind of activity you need to work out over time, right? So when you're having a lot of participation in the derivatives markets, a lot of activity on the futures, it's just people that are really aggressive, right? And they're getting in a position. A lot of times you have to kind of wash that leverage out of the system. So now I would say we have our first significant daily level, right? Established as a low. Found this imbalance right here, wicked into there. So this would be your single, I'm pretty sure that that's our single print level. So if we go back, so I think that we wicked into, no, we actually didn't. But it's relatively close to a gap. So I think that this is a good low so far. I don't think that you can say, all right, I'm just going to place my stop down here and this is going to just start trending upward. I'm much more inclined to believe that this type of structure is kind of corrective, right? So as I said, you're getting, anytime you bring the market to a precipice or a cliff, we'll say, anytime that you approach a gap, right? This looks like a gap. This is a structure that, based from the previous high, we have one big impulsive candle, not visited again aside from this. Anytime, and this already happened obviously, but before getting into that level, anytime that you're approaching a level like this, you're approaching another level that could potentially have a bunch of stops down here. You've seen it happen many times before where you build structures like this and you do have some kind of cascading liquidation that does end up finding support. It conveys this idea of this being a void, right? And a lot of times the market is going to get very imbalanced into that location, right? This is, really, if we just look at this from a structural standpoint, this is the last significant level. So by all means, you would be, I would be remiss not to have bid this. So unfortunately, and my bids didn't get hit for where I moved them, but I would absolutely have bid that, right? So this is the next structural significant level that we have below us. I'd say that this one is quite significant, very significant high, tested again. Market came back up to this multiple times. There's the Elon candle. The range high of this, I believe would have given us a significant bounce, right? There's no reason to believe it wouldn't. You get some people that say, like, I guess the argument could be, that area is so obvious, but just think about how you feel whenever you're selling a level or buying a level. How many times you actually buy the level you say you're going to buy, well in advance? Sometimes it's like, it's approaching that level a little differently than I expected. Right, that's something that I don't think most of the market is actually buying the level that we're all aware of. So we come into this pocket right here, which is the first real significant low after this impulsive break. A lot of people are going to be anchoring around that. Okay, you have to maintain that to maintain market structure. So you create a big imbalance into this low where you're getting a lot of people that, again, are just jumping ship. And if they're not jumping ship, they're getting into breakout short positions. 99 times out of 100, you're going to get a response, right, before that gap into that void. So where we are currently right now, I think that your daily levels, your daily high and low are clearly your most significant levels. I don't think that it's impossible that we revisit this level, right? I don't think that it's out of the question that we could come down here. I actually would expect that over time we're going to be coming back down here again. Not to say that we can't, right? If you look at this structure just based on our more recent activity, right? We've only had a strong trending day in the last day, but before that, we just look at some of the profiles. Right now, we're coming into a naked point of control. So from previous profile, excuse me, 2 very strong trending days down here, but we ultimately fell into a composite. So this little range right here, it's a nice 2-day composite. I'm going to go to my TPO chart in a second. Kind of an area where you would expect stickiness, right? If we look at this from a daily standpoint, that's, that little daily cluster high right there. I would say that, if you're still long here and you're expecting that this is going to trend upward, you might have something negative in store for you. I would just wait for a price to establish above this high. I just think in this environment you have to, it's very easy to think like, yeah, trend's going to resume, but the market has shown us it's walked into a serious seller. We had the Coinbase premium this morning. That's great, but this was relentless selling. If you were trying to fade this the entire time, you're just getting walked over, right? You could have thought the entire time that it looked like a good bounce location, but it was always gradual, right? There was no major splash aside from this, but the market completely fell right into that. So typically you would want to see at a low that you have some type of high volume spike, right? Some type of exhaustion by sellers, some type of imbalance. We did have the imbalance. But I think from a market structure standpoint, I keep forgetting that my mouse button is no longer one of the drawing buttons. It changes the speed. This high, I would be much more comfortable getting above this high before targeting these highs again. All right, so just look at this as, very well that this could be your mid-range, your low, and your high. So we're looking at right around 57.6, 50, we'll say 40, 49, 8, 50, right around 50,000. And then the lows being right around 40,000. Okay. I'm going to go over to the TPO in a second. So just one other thing, we'll just zoom out into the higher time frame. This type of structure is we're still elevated from some of the more important trending tools that you might use. Now we've reclaimed I got to change the color again. I made it dark, so some people like the dark. We've reclaimed, we're on the way to, it looks like reclaiming the 20 period. Make this a little thicker. Okay, so that's a 20 period moving average, so we lost that temporarily. So there's a good amount of confluence, as you can see, between this 20 period and the midpoint of this range, right? Not really a range yet, right? But you don't get to, it's really easy to teach people how to trade ranges after they've already happened, because you're like, oh, look, the high, the low, and that's it. And all you got to do is sell the high, sell the low. What you forget is the real skill is noticing that maybe a range is developing. So 20 period moving average, the midpoint right now, these all line up with this cluster high, right? That was the highest daily close on the way down in that cluster. Very short-lived. I think that you want to zoom out here. Let me just put this moving average off. I think that you want to zoom out here and look at this on the lower time frames. Daily levels, weekly levels are very significant. Okay, they are trend-defining areas of structure. A lot of higher time frame traders are going to use them to inform their bias, but you have to zoom out because, as anyone who's part of BlockRoots knows, there's a lot that goes on, right, in the daily wick, right? You could have most of the volume in the daily wick. I think that you want to give weight to the highs of this structure. So I'll show you in a second what we're going to turn this into. It's going to be a composite. This is the platform that I trade on. So let me just move this over. So I just set this up recently. Looks like it's reset. So I didn't. Okay, so it has reset. So I'm just looking at some things to make sure that I'm not, like my email's not popping out. This is a footprint chart, guys. So, we've gone over this in BlockRoots. We've gone over it on the streams a bunch of times. You're looking at the actual activity that's coming in, right? So specifically when I'm trading the lower time frame, I'm going to be using this and what I just had, which is a volatility-based chart. This is a range chart. I usually use a trend reversal chart, which is very close to point and figure, but very simple things to learn. They just take out a lot of the noise that time charts leave. But what we're going to be focused on is the TPO. Okay, so that's my bread and butter. TPO, market profile, right? So those are the same thing, time price opportunity. What we're seeing is context, right? So all we're seeing is that the market hasn't been trending, okay? Weak trending behavior over here. I think that it's more important to point out that it was within a more balanced structure. So we're looking at this day that made the low, right? Initial low, okay? Spent most of our time within the structure, all right? Semi-balanced day. I'm looking at the composite ultimately that's forming right here. Okay, so let me just combine these so you guys can follow along. So we were looking, yesterday I was looking at this structure. I'm still getting used to changing these profiles. Because I was using XO and trading on the exchanges, and this has everything now. It's absolutely phenomenal. So the idea yesterday, and I posted this on Twitter, was this was a 2-day composite that we had formed. So if we just look at these 2 days, so I'm going to unmerge these. I'm going to try to get better at doing all of this. Reset. There we go. Not exactly a balanced day, right? But it's semi-symmetrical. Most of the value area, okay, or where value had developed, was within this entire day, right? So we have back-to-back days. They're not, they're not inside days. We have 2 days where most of the value had been sort of confined to the same area. Not much went on. This is ranging price behavior, sort of rotational behavior. So yesterday, the move off the low was significant, but the first area that we were coming in contact with was the fat point within this structure. So this point of control, that's essentially where most of the activity came in, okay? So my idea for that was if we're able to gain above that level, which was essentially this high at 46.5, then I was targeting the highs of that composite. So that's how I would apply it immediately. But we're just right now, and just to give you an idea of why I'm saying that these highs are significant, we're doing the same thing again. We're back within, which is what is a larger composite that preceded this micro composite. And the reason why I have these separated, even though you could kind of compile this entire composite, is because these 2 days were very balanced, right? So they were very much within each other. But still, this is where we're at right now. And now you can see we combined the last couple days. Okay, and this structure just shows us the distribution of activity throughout the days. You could see that most of the activity is up here. So this point of control now, extending all the way forward, is exactly what we've come into. So that's a value area high, and that is, where that's a cutoff point for where we are right now and for where I could get into a long position. The only area where I'd be willing to get back into a long position here, or to start looking for longs, would be to see if we come back down to this low. Okay, so now on the way down, right, I would look for these highs to hold, so right around 48. All right, we've already retested that once. I don't think that you have to beat this on the first pass, right? I think we could easily come back down here, find support here again, and then I would look for ultimately a move back up to these highs. But until we break, let's say, until we're above 51, say 51,100, right? I don't like to say exact numbers because a lot of times I have an idea of an area in mind that I'm going to start looking to. If I see the activity that I'm looking at, if I see the activity I'm looking for and it's $50 before the level, more often than not, I'm going to take the trade, even if it's not exactly through the level. But this level right here, this 51,100 level, so you could say 51.5 if you want to go off at the high. That's really the area where I could say, okay, this is another long that I'd be willing to take higher up. So I'm getting used to scrolling in and out because I notice it scales weird. Here we go. Let's see if I can, maybe if I hold the shift, nah. Here we go. So this is the 5100 level, and the next level I'd be targeting would be right around this point of control. So just immediate levels, right? So we have a naked point of control that's right around 53.5. All right. So this is just showing me the immediate sticky levels that we have between us on the lower time frame. But I think that either way, if we just zoom out, we've been in this kind of rotational behavior on the low time frames, and we have a significant high and a significant low on the high time frames that we put in. I would just expect, and my own approach is going to be that when we approach, let's say that from here we approach this high. Let's say we break that 51,100 level. We sell this hard. That's what I would want to see. We break that level, we sell it hard very briefly. That was a bad snap. I'd look at that 53 level, right? That naked point of control is an area where if I'm swing trading, it'd be a location to manage. But I would probably look to sell this if it came in here vertically, right? So if we broke above these highs, right? So if we make a vertical move up towards the high, not if we're grinding up there. So if we get to the high, let's just say if we get to the high by the 5th, right? Versus if we get to the high by the 15th. Those are two different scenarios, right? This sort of slow grind, that is very comfortable, right, in its approach, giving you all the time you want to wait for it to come to you to short, and that it's a lot more dangerous, right? I'm much more inclined to expect that that's going to break through. If we vertically approach this right now, I could see us flushing these highs, okay, and then breaking back down and coming back down to test the range mid. And then guys, like, we're playing this thing as it goes. You know, we're all confident, but there would be a lot of fear in the market, and I think another strong period of selling if, let's say that we break this high and we have a bearish close back below, right? Very quickly, a bearish close back below. And, you know, depending on the activity afterward, if price just goes limp, you know, this could be a much longer correction, right? Just always zoom out and recognize that, you know, this type of structure, there's an immediate, if you have something like this where you have, you know, we have a weekly structure, and let's say that it occurs in the next day or two, right? Let's say that, you know, this is the weekly highest point now. Let's say that this weekly candle, and again, it's only, we have 6 days left in it. Let's say that we're back up at the high immediately, right? You can't say like, oh, you know, this is clearly a change in weekly market structure, you know, yada, yada, yada. That wouldn't look bullish to me, right? I wouldn't like that. I would rather that we went on to range for a longer period of time. I mean, arguably, the best range that I think you could have put in would be something where we did something along the lines of, like, let's say we end up doing something like this. I think that that would be more bullish, even though there is a sense of urgency right now, it seems to get into the market by some large players on Coinbase. I just would much rather the structure move longer sideways, right, than just continue vertically. So I think you have to be mindful of that. Like, don't get gung-ho, right? If I could leave you with one thing from this, like, don't get gung-ho about it yet. Like, it's great that we held the low. I think there's some obvious reasons why the low didn't look like it was going to just fall off a cliff, right? If something happened in traditional markets where there was a market event, like, what are you going to do? You saw what happened in March. So you have to be cautious, right? You can't just be punting longs indiscriminately without any kind of awareness of what's going on. I certainly was very aware because I trade intraday. Shakiness in traditional markets were getting felt right away in price action. But if we're looking at this right now and you looked at how this was coming into the low, this is what you want to see ultimately for the first low to establish, right? You see this type of 3-drive structure. You know, sellers had 3 separate occasions to really drive in the stake. So immediately your bullish setup on the low time frame is if you have a structure like this, at least it's for me. My structure, a very immediate, obvious long for me. Shit, that's not the drawing tool. I keep pressing a button on my Razer mouse. I can't even slow the mouse down. I'm just going to pull out the line. Here we go. An immediate trade that I look to take is when I see a structure like this, you have a 3-drive structure, and then you have a move above this high, right? All you're looking at is a change in market structure locally, right? So higher time frame trend, this might be a higher time frame range that forms, but within this structure you have these, you know, local trending periods, right, that are taking place within this local downtrend, right? So what is defining this downtrend? These points right here. Okay, so as soon as you start retaking structure in the opposite direction, it just says, you know, in the interim that things have changed. And after you've put in a structure like this, broken lows multiple times, if you have, let's say, just consider it this way, you have 1 low, 2 lows. If you're above here, you have 2 lows below you. You have 3 lows below you of that many participants that were expecting trend continuation, which would have looked, you know, a series of lower lows and lower highs, right, for that to resume. This is the first time that that changes. So you have, arguably, you have some crowding that might not have been squeezed out yet. And this is just sending a very clear signal to the rest of the market that, you know, things in the short term might not be as impulsive as they had been prior. So short-term levels, you know, the levels that I am most interested in, I would say, you know, conservatively, right, without getting too focused on, without getting too focused on the precise level. Since we have this composite back here, we have these 2 days that were pretty balanced, this local composite, and you can look at this whole area really, because there's a little composite here that was very balanced, a little composite here. And as I've said, you don't have to have multiple profiles within balance, necessarily back to back to back to back. You could just have a big day like this, large dispersion of value, and price has been not able to price has not been able to escape that. So we've really been confined within the range of this huge trending day. So above this level right here, so above 51, 51.1, and I think that you're probably targeting this point of control right around, where is that lining up? It's too light, around 53.5. Swing trades, willing to place more conservative swings. Nothing to speed change again. One sec. Whoa. It's very mercurial. Above this level, I would be willing to put on a swing position and manage it, right? So intraday positions off this level, manage the position, make sure that, you know, shit's not hitting the fan at this level. I think that it's more likely that if you do break above this, that you're just by default covering this gap. It's not exactly a gap. You know, this is a pretty sticky area, this little block, right? If you don't have to just, if you're looking at the chart, identify the areas that there's a lot of congestion, right? When you pass back to these levels or revisit them, they're going to slow price down. So just think about it. You know, if we're looking at this topographically, a sideways profile, just imagine it's like that, right? These are little speed bumps on the way to where you're trying to go. Okay, the gaps are right here, and this little level is just your side profile of that. And you know that that's going to cause trouble to anything that's trying to roll over that. So this composite right here on the intraday, I'll look to manage that, but I think more often that even though this isn't necessarily a gap, that you're probably going to overshoot. The market is just, it's aggressive in both directions right now, so I think that you're very likely to get that. I want to go over some DeFi real quick, take questions, obviously. You know, in this kind of environment, I don't want to be thinking that everything is just going to continue to move up together. The way that it has been, you know, sort of just passively throwing darts at boards, passively indexing, everything's going up. I think that what's going to happen is quality is going to attract most of the volume in the market. One mistake that people do in bull markets is like everything's moving up together. So people are trying to, or traders are trying to like be in everything rather than take a clear sign of what is showing the most strength and expect that that might just be the thing that'll extrapolate moving forward the most. So rather that'll continue to be the strongest moving forward, and you should just go with that one. There's like this, I don't know, it's a game of musical chairs, and it's also like, oh, this is the strongest one now, and now we have to find the one that's lagging, and then we have to find the one that's lagging that one, and then we'll go back to the strongest one. I think that you have to recognize that with each sort of slice of this cycle, right? So now I think we're kind of mid-cycle, that you should probably just be sticking with strength the most. I would be very weary about like punting things that have not, you know, caught a drift of wind yet. So on pullbacks, right, I want to make sure that if we just go back to the other day when we had the into the lows, right? So this is into the lows. I want to know like what is doing the best right away. I want to know what over time is consistently has been doing the best. And I know that sushi has been the like top, you know, out of all the horses, sushi is the number one horse, you know, top 3, top 5, whatever. So I am always going to be trading sushi. And I have a sushi position, obviously, but I become more active trading sushi. But that's also because I've become more active on some of the exchanges I wasn't as active on. But we're looking at right now, right? So Cake, really good rebound off the low. Ray, I want to go into Ray because you're going to see a lot of similarity in how new listings behave, because it's very similar to Sol and SRM. But looking at a chart like this, the reason I put this up is because after an event, after a major correction, I don't want to say this is a major correction. It's pretty docile, honestly. Again, it was the way that it corrected. It felt kind of controlled. I've said this a couple times recently. Maybe the market just feels this way now because we have a stronger bid than we've had before. So what I want to look for is clear signs of strength and consistency. And everything that's on this right now has actually been strong. So now it's just a matter of seeing what is exceeding, what is, you know, outpacing the others. I want to look at Ray, I want to look at Cake, and I want to look at Sushi. So just by looking at this alone, I'm going to filter out some things to pay attention to. And then I'll take some questions, as I said. I mean, I want to go to Ray first, because I think this is important to point out. You know, I was in Ray. I got out of Ray. I got in and out of it a couple times, some awesome trades in it. I said it, you know, I could see Ray hitting 20 bucks. It looked like it was on its way there, but it just lost the trend. So what I want you to pay attention to is just the similarity between this chart, right? If you look at this chart on the low time frames, okay, and if you look at something like, go back to, this is going to take a while now because this is has a lot more time in between. Hopefully I'll be able to scroll faster, go to the 1 hour. Okay, so this is Sol's initial, right? So big move up, much longer correction. Let me zoom out so in the 4 hour just chunks it a little bit better. So Sol, I think it's SRM that has a very similar structure to Ray. So this is SRM, right? Again, Sam project. I'm betting money on anything that he has his name attached to. So you have a new listing, right? You have a lot of people that, one, they already have access to this. Let's say they're locked up, they can't sell. That's great. But you have a ton of people that are trying to outbid each other in the beginning to get into something. It's in a bull market right now. You know that it's going to have a couple pullbacks and it's going to run for a bit. What you ultimately get, though, is you get a bunch of late people that are buying the high and expecting that this is just going to resume up and have no correction. So you have a lot of late participants. You get a decent amount of a trend, right? So this ends up lasting a couple weeks. And then inevitably, you get a very crowded area of market structure. Now you have people that get long up here, price corrects, and they start thinking, damn, I got to wait for this thing to start really correcting. Maybe it goes through its accumulation period. They are going to constantly try to be getting out of break even. You have new people that get in, price breaks down, they're going to get back out of break even. You've seen this drawn before. It's the euthanasia roller coaster. This has to take place at some point. In a new alt, in something that's been around forever, this is going to be the case. You're not going to see that something gets listed and doesn't have a major correction. A lot of these kind of hinge on Bitcoin either way. When Bitcoin has a major correction, there's not really anything that outperforms it that is very liquid and traded on exchanges. The only way that things outperform is when they're strictly on dexes, they're really illiquid, and it's kind of like a toss-up between it, whether or not it's worth paying the gas to get out of your small position or to just leaving it, right? So you don't see that there's this immediate flee that you see with assets that are sharing exchanges with Bitcoin and there's no friction whatsoever in terms of getting in and out of them. So Ray, has had a lot of hype behind it. And ultimately the same thing happens, right? You have a bunch of people that they're looking to be breakout traders. The trend starts collapsing on itself. You get that first large amount of people that I would say get involved too passively, and they're thinking like, oh, this is going to be the correction up here, and this is going to be the vertical accumulation. It's an easy mistake to make, and the market just gets very imbalanced, right? And all of the people down here clearly have a much better cost basis. You're going to have a lot of selling, right? More often than not, people are going to be pretty keen to this, that things are going to have some type of correction. And at some point when the market is just printing a chart, and I think that this is a major component of it, when the market is printing a chart like that, like you're just waiting for the inevitable, right? At some point you're thinking, I don't know, is this just going to go straight up? Like, I know that, I don't know, let's say like, I don't know too much about, technical analysis, but I feel like you want to have, sideways structure, a range built. I'm going to get out. You get enough of that and you get panic selling and you're going to have some type of larger correction. I think that this ultimately, I think it's going to be stuck within a range too. I don't think that you're going to see immediate trend resumption with this. I would expect that, this $9 level. So what we're right around, we'll say that this level right here. Okay, let me put off the profiles real quick. I think that this level is the level that you need to see flipped before you could be really bullish again. So the first significant low after this high, so significant back-to-back corrections. Okay, have a flip down here. Trending strong since then. He took out these lows, but I think that this is probably the most important low, right? So the important low that we have to overcome that is now going to be resistance. So that's around, we're looking around 870 to 9, let's say 910, right? You can't give a precise level. Alts are not exactly like, they don't trade like treasuries. They're not like to the tick. That's not going to be a defining level. So I think that Ray ends up doing exactly what Sol and SRM did, though. What ultimately could happen is because it's at this stage in the cycle, there's a lot more certainty about what we're in, and we're in a bull market. You could see a shorter duration correction. So the lockup also is pretty important, I think, because if there are holders that cannot sell right now, there's just less selling pressure in the market, right? So you might not have this long correction that you need to go through, whereas with this, this took, what did this take? 2, 3, 4 months now, 5 months. Was it go back to September? This took a while, right? Ray might resume sooner just because it's in a different context currently. I want to look at Cake too. Similar story, right? Cake, the one thing about Cake is this actually had its longer correction, meaning it had its longer period of sideways activity. The benefit of PancakeSwap is, as everyone knows, I would say it's like this is like I don't know why I put it this way, but it's like the blue collar decentralized exchange, right? It's like, ETH is like hoity-toity. We pay hundreds of dollars of gas fees. That's the way that it's been described almost. And PancakeSwap is more accessible to the newer retail. And trust me, like with my gas fees, I'm more inclined to just be like, I'm just aping in. Like, I'll pay 2% slippage because I have much higher time frame plans with this. A lot of time it works out in my favor. And it's just the cost of doing business. But if you're new to the market and you're like, all right, I have $1,000 right here, I'm going to lose $200 right now just getting into something. No way. Like, you're priced out. So the cost of that in its own just prices out a massive segment of the market that we're really relying on right now. So I think that anyone right now who currently has this more attractive fee model is going to benefit, and anything that's connected to CZ is going to pump. So this, though, in terms of more significant levels, right? If we're just looking at levels within this local trend, okay, we took the more recent lows back above the more recent high, right? So oversimplifying things, I know that sounds ridiculous. Took the more recent lows, took the more recent highs, okay? I think that the more significant level to overcome is probably a level like 15, just because it sends a clear message that that this is not something that maybe, I just hit the fucking speed button again. Sorry guys, fast this thing moves. I think that if we're above 15, it sends a much clearer message. And by all means, like, long this to your heart's content if you want. But if we're above 15, it sends a much clearer message that this is a much larger correction that now is in the rear view. Whereas, where we're at right now, even though, and just to drive this home, this high is not as significant as this, excuse me, said that backwards. This high right here is not as significant as this one. Okay, so this being the top, this being the first significant correction, second significant, I would say this is the third, right? I don't think that this little cluster is really worth hanging your hat on and saying that, okay, so that flip is the exact criteria I'm looking for to say that this is right away along. You could have something that, just to zoom out on the higher time frame again, because a lot of these are really extended, you could do something where this is resistance and we ultimately correct down again, right? And we have a double bottom, right down here with this low. I just wouldn't get overly enthusiastic about this, even though it does have a good value proposition from a cost basis, right, from a fee standpoint and just being new. Another caveat, a reminder though, rather just one caveat, is that the benefit of, CZ's name attached to things, they pump, but they also really fucking dump. And, I don't think that he actually cares about anything that's attached to his name wrecking people. So that's something to be considerate of, I'd say. So that, 15 level, I think that's probably the best level. If you just look at this structure so far, there's really, when we zoomed in, there was really no structure. So the point of me going through all that was, if we're looking at market structure on low time frames, which I said is a good thing to do to see where the congestion was, this is more locally some congestion. You do see a kind of flip right there that's taking place, but I think with these you have to see a good amount of substance, right? So we have to see something like this. I know I need to see something like this. All right. That to me paints a much clearer picture. And at that point, I'd be targeting the highs again, right around 19. Other than just getting in this because it's a really strong market, and I don't want to spread myself out too much like that. And clearly, I'm telling you how I approach things. Let me look through some of the stuff in the chat real quick. Okay. Yeah, it's Crypto Sam. So real quick, I'm just going to go through these. I'm gonna look at ETH too in a second. No, yeah, I think so. Yep, I went over that. So Crypto Sam, think ETF only comes once you can control the volatility of the market? I don't think so. I don't think that's what it is. I think it's just a regulatory thing. ETF, I traded ETFs for a while. Triple leveraged ETFs. So the concept of ETF and non-volatile are not mutually exclusive, or the concept of ETF and volatile are not mutually exclusive. If anything, there's a lot of ETFs that are created and packaged to structured products to be volatile, right? So just think about leveraged ETFs. Yeah, I'm gonna look at ETH. I don't know what the PayPal is, honestly. Maybe just an on-ramp. I'm not really sure though. Standard deviation of price. Well, you could look at a few things. I mean, if you're looking at the standard deviation or variance, look at realized volatility. When I'm talking about standard deviation, I'm talking about I look at things like, you could look at standard deviation bands from VWAP, so that's a good tool to look at. But I look at average subperiod rotation size. So what I look at is the average half-hour rotation size. Think about the ATR. So the ATR is what you can use. The average true range of price movement. The average true range is going to show you the average true range based on what time setting you're looking at. A lot of the times I'm going to be looking at the 30-minute chart in the lower time frames. So that gives me an idea of what sort of the norms are. And anything that's multiples of that stands out. Imagine China printing as much as possible to buy all the gold and silver around the world. Yeah, I don't think so, but yeah, you know. Thoughts on impact of monthly CME futures expiring, causing volatility. Yeah, I'm not too sure if we're at the stage yet where CME futures don't have a lot of volume, but they do have a high open interest. So you could bet that the basis trade is definitely in play. So unless they're rolling positions, which was what they have to do to hold on to positions, then yeah, you could see volatility as they maybe unwind some of those carry trades. I don't think it's as significant as endogenous crypto related things. And I say CME like it's exogenous, like it's outside of the market. I think crypto native has more of an effect. So crypto native futures, and it's not that we have like expiries that are important in crypto, but with options more importantly. They're becoming more and more of a thing. Someone asked me the other day in a live stream, I don't know if it was on BlockRoots or on one of these, but about options expiry, and it didn't dawn on me that they were talking about the crypto options. I thought that they were talking like there was some, it was a triple witching or quadruple witching in December, or was it November now? So outside of markets other than crypto, I can't even remember. But I wasn't thinking about the crypto. You have to pay attention to crypto options. So pays to learn a little bit about options now. They are going to have an effect on the underlying spot market. In traditional markets, they absolutely do. So you definitely want to be aware of any kind of really large expiries coming up, or large by open interest. Okay, any particular strikes that stand out. So you definitely want to be aware of these. I don't know if you want to pay attention. Sorry, my eyes are getting dry, guys. If I'm like blinking like a lizard in front of you. I don't know if CME options are going to have much of an effect. Yeah, you know what? I just noticed that. My head is covering the screen, but I don't think I got to too much that was beyond my head. What are we looking at? Okay. Some more questions. In silico, awesome. Trip is great. Jake, I don't give specific advice about investing lump sum. Usually lump sum is a little bit like ripping off a band-aid in a market that is moving really strongly. I know I just lump sum 90% of the time. When the market is trending, I lump sum because I figure, I'm not really certain the market's going to come back to a level that would be great to buy technically. For new people that have no market savvy whatsoever, the overemphasized method is to dollar cost average into things, and that's just because it takes the emotion out. It creates sort of a routine, but I can't give you any specific advice. Litecoin Ico Pattern. Yeah, that's kind of what it is, Drachma. Yeah, I'll look at Litecoin. CRV. So first correction in Ray. Let me go back to that in a second. I'm gonna look at Shroom. Yeah, because I'm hardcore into Shroom now. Okay, so just looking at Ray real quick. So in a structure like this, I honestly was trading in and out of this. I got in at 4. I think I shared the screen on Twitter, so if someone wants to look at that, that's what I like about FTX is it like has the arrows on the chart. I don't use the platforms anymore now. This connects to everything, which is absolutely phenomenal, and I trade right from the screen. So to the other side, I'll pull this up for 1 second. So it's right here right now, but this is what I trade off of. So this is going to be to the right of my screen. This is my ladder, so I'll have this one here. So right now it's separated based on this is based on 50-cent increments, okay, and this one on the right, as you can see, is 50. So this is good for me if I need to set a limit off of the ladder that's slightly higher up. I use the larger increment chart, and this is for me trying to click right into trades. The benefit of this is on every one of these screens I could also do the same thing. So no matter where I am, I could go on any platform on here, on FTX, on Binance, on Bybit. Most of the crypto exchanges don't have to switch in and out of their platforms. I get immediate execution. It's faster than being on those platforms. I don't work with Quant Tower, so I can't get you a discount. But I could trade right from there. So for someone who asked about this, and that's why I'm answering this, let's say I want to buy 100,000 contracts, sell it immediately at market. If I want, I can, I could limit buy down here by left clicking. Okay, go ahead and set a stop loss, right? I could do all of this right from the screen, all right, which is absolutely phenomenal. So that's what this platform is. It's Quant Tower. As far as Ray, so I was saying that because FTX is a nice platform. Their interface, it shows you where you enter, where you exit, yada, yada, yada. This does the same thing. I have my trade set up so that when I take trades on this, if you exit out, it'll make them disappear, but it'll place little arrows wherever my trades are and show me the amount that I captured. Now, just pull up OBS, make sure you're seeing the same thing I am. Okay. With something like this, look at all you have on the way up. So when you have anything like this and it's a new asset, I'm looking for the gaps to be covered. In a bull market, I'm not looking for the first gap to be covered. Honestly, I would say that 9 times out of 10, this gap, and I'm saying gap, I'm looking at the first really strong trending move. What I'm talking about is where things end from this strong trending move and to begin to consolidate. A lot of the times, this little low right here is a great buying opportunity. So, and if this happens again, right, it's like it's useless now because it's already been tested. But if something is newly listed, you get a bunch of really good, strong trending trades out of it, and then it's probably going to fall on itself. And more often than not, the first consolidation, that low, that gap, I would look for some type of corrective structure to form there. Now, yeah, it could be one wick and it could be out, right? And you miss that opportunity. I would much rather wait to long this thing until you get a reclaim of that level. So you flush that little gap. This thing proves that it's not, what's that place in Harry Potter, or is it Harry Potter or Lord of the Rings, Mordor or whatever it is? Just think about it going to the worst possible place, right? So when this proves that it's not just going to completely fall into the void, into the black hole that exists where we do not see below that bar, that is enough of a level to create a massive amount of panic to flush out a lot of people, right? Just think about the idea of approaching a gap. Like, how do you behave when you see that Bitcoin has suddenly left all structure and it's going back into a level that was an impulsive candle, right? That had nothing. Now, if you're looking at imbalances within the candle, you might have some access to information such as where might be a good area to bid within that, right? Where you'll see price wick to, one of the single prints, blah, blah, blah. But this is a lot of the times going to offer you relief, all right? So right now, again, the level that I said is above 9. I'd rather see it above 9. So if you're long off of this low, you know, that's just something to consider. Where'd the chat go? Okay. I don't know if there's a Mac version of Quantum. Quant Tower, excuse me. Thoughts on HODL with leverage? Nah, I don't advise holding with leverage from anywhere. I mean, leverage is incorrectly used most of the time, and I think that everyone should get a little education on that. But I would never tell anyone what to do. So when you come in the stream, like I'm telling you what I'm looking at, what I'm specifically doing. So which cool thing about that is, yeah, you know, a lot of the times you're seeing exactly what I'm interested in, but I can't give you any specific advice. So ETH real quick. ETH BTC, you know, ETH has been weak as hell against BTC lately. It took out all the significant levels on the way down, right? Unfortunate. As much as ETH is, like, some people think that it's BTC and ETH and they're both in the driver's seat. One takes a lead at some times. Of course, we saw that. That is the case. Like, there was a bit of confusion in the run up because, you know, ETH does have more capture than BTC. You know, it's higher beta, but it'll underperform to the downside, right? So where's my longer term chart? ETH broke the all-time high. I would have said 99 times out of 100 we would have had a lot more follow through than what we've had. Look at this Kraken chart, it's scary. But we didn't, right? ETH broke the all-time high, and Bitcoin proves again that it matters where Bitcoin is in its cycle. So hey guys, I'm ready to correct. Like, that's like Bitcoin being the person that drove everyone to the bar and saying, hey guys, I'm ready to go to bed, you know. And so when Bitcoin checks out, wherever you are, you better tap out too, because it's very rare that Bitcoin has a big correction, and things, again, they maintain their strength. They might maintain it relatively against BTC. They might maintain it against BTC to some degree, but they're going to get smashed in USD value. Still, right? They might slightly, they might hold up slightly, but they're going to get smashed more in USD value 9 times out of 10. So ETH right now, you know, it's kind of doing the scariest thing if you're an ETH holder, which is falling back within. It's above it now, right? Which is a good thing. But if we're looking at this, drawing tools are not locked. All right, so there's your weekly highest level, close. All right, daily highest level. You want to hold these levels. You don't want to fall back within. I feel like it's kind of like if Bitcoin ranges, this might fall back within. And does that mean that ETH comes much further back down? I don't think so. I don't think you could think that way in this kind of environment. I think context is pretty important. I think we did kind of pass through this paradigm shift with a lot of I think, you know, the scary thing is, like, I'm saying that, but Bitcoin did, right? I know ETH holders want to really believe that, like, they got the invite too, but definitely not the same, right? Like, we just have to, you know, MicroStrategy didn't put ETH on the balance sheet, right? ETH is kind of like, you know, Bitcoin is, how many different comparisons are we going to make? Bitcoin is like the ringleader, and ETH is like the entourage that's part of that. I gotta flatten these orders, guys. Sorry, one sec. I left orders on there. Hold on one sec. Canceled. Oh, order history. Just double check something. I'm on a different part of the screen, but let me just cancel out of this. There we go. ETH, it didn't gain the limelight the same way that BTC did. So that's one thing that I'd be careful about, is that, you know, it is very well satisfying it's not satisfying the technical requirement that you would want to see, which is it's holding its previous all-time high. It is right now, but it's like, as you can tell, it's not I mean, on the lower time frames, it's a good response. I don't know. I don't like the way that it sits so close. I know that if I was an ETH holder, this would make me worried, right? It is right now. It's close, right? It's not there. It's not like we're back below 1350, but it's uncomfortably close, right? If you're an ETH holder, like, this is, because from a technical standpoint, this kind of break, you should get a good amount of cushion from there. The last thing you want to see is fall back within here, because then it does open this up to retest the lows, right? Not retest the lows, but retest more local levels. So yeah, just I'm gonna look at Shroom in a second. Okay, CRV, I wanted to look at that. So my friend got into Dracula. I'll look at that in a second. I think it's kind of a meme. CRV, where is that? Because I wanted to look at that. CRV is one that I was thinking about getting into. I was in and out of all of these at least a couple times. I mean, to be honest, I'm losing track of all the things I've been in. But if we look at CRV, let me just auto this, log chart. I mean, from a technical standpoint, the most significant resistance has been this level, right? So the first area we would look to after this flip, right, on the way down, not much of anything. Let me go to the daily so it's a little bit more. I mean, this is a trending period down, first consolidation, first structure put in, right, going back to August, long sideways accumulation, break of this range. A lot of things have gone on to exceed their previous initial consolidations, and they've gone through their markup phase and been past that. So I don't know, maybe again, curve has been kind of lagging behind a lot of things. I've heard there's some really strong fundamental cases to be made for this as a blue chip, but it is having trouble at its first resistance, while the rest of the market is also having a pullback and, you know, coming off of being on a bit of shaky ground. Doesn't need to mean too much, right? Could very well be back above that level. I just would want to, I wouldn't want to long this. The levels that I would want to long this, honestly, are, they would be all the way back down here. So that's asking a lot, right? So that's right around, from a structural standpoint, that's right around say 110, 105, or we'll say 1, right around there. If you're looking for strength before that, you need to see it on lower time frames, and you don't want to do that. You don't want to go down to lower time frames because really there's nothing daily yet that stands out, right? So best case would be something like this, right? So reclaiming above 230, but then you're still, you know, you're buying into resistance. So that's just something to keep in mind. When you look at the BTC chart, it shows it's relatively a lot weaker compared to BTC. So this is a chart actually I wanted to look at. You know, a lot of things have been underperforming BTC lately, so that's something to consider. But this has been doing it for the last 4 weeks. I don't know. I mean, I think you have to. I don't think like you have. One thing to just mention, because there's like this fight over what chart you should use. In a bear market, you want to preserve. I mean, depends on what your intentions are, right? So I actually can't say that because some people want to preserve USD, some people want to accumulate BTC. I think that the BTC chart is good, is that in that if you're trading off the USD chart and you're approaching a significant level against the BTC chart, right? So your curved BTC chart, you have to treat this as resistance. If you're looking for support, I think you don't have to necessarily find that it's doing anything glamorous on the BTC chart, but to each their own, and I'm sure that all traders have a much more sophisticated approach. I just don't think that this is looking that compelling right now. I want to look at Shroom. I said I would do that. I'm in Muse also, which I forgot about. I'm really happy that I forgot about this. I probably would have sold it, honestly. But Muse is something that I'm in, so that's a really nice surprise, honestly. I forgot that I'm not like super savvy when it comes to MetaMask. I wasn't one of the people that created 100 wallets, so I created a few, but I just forgot about one of them that I had, and I had Muse on it. So Shroom, this has been, I was in and out of Shroom, like for a while. It was pissing me off because project wasn't updating, I guess, as fast as I wanted to. But I think one of the important things is that the main developer behind it, he doesn't want people who are just in there looking for profit. If you're not in there, if you're just asking when the release is going to be, it's coming, I believe, at the end of this quarter, March. If you have short-term goals with this, just leave. All right? Which says a lot, honestly, because he knows what he's going to be releasing, which is probably something that's pretty damn awesome. And this has been, recently it has been outperforming BTC during this correction. So we're looking at right now a daily chart, and the last 4 days it has been holding up exceptionally well. And this did not nuke after retesting this level of market structure that in a DeFi pair that's thin like this, you could see them, you have a technical structure like this and you think that it's going to offer relief and it just nukes down, right? You've seen charts just get flattened and destroyed. So this right now, being that it's small, it's also easy to outperform BTC, or rather to hold up against BTC. I went over why that might be the case, but knowing that we're going into March and there is a release coming out that's going to be very big, right, with their decks, I think that this is looking as just a better and better chart every day. It's easy for me to say that. I have a substantial stake in this, so I have to say that. I have a substantial position in it, but this right now, giving us this technical retest off of an area it doesn't even have to. It says to me that there are buyers that are stepping in right there and defending that level. And it's a very under the radar project. That's another thing you have to really pay attention to. Like, there are a lot of people that are shilling it, like the alt people. Like, you guys know me, I'm not the alt guy. So if I say I'm in an alt, like, yay for me, I'm in an alt, look at me being fancy. But there are those big accounts that all they do is just share $5 million market cap alts, and that's all they do. And they have a room that they do that in. They make a ton of money doing that. Myself, Josh, there's a couple other big names that aren't even vocal about it, but they're none of the big people that are like well known as alt DeFi guys that just shill alts, and you can see that they're panicking on the way down for some of them because they're just not recovering, and they keep sharing like new information about the project. The fact that they're not sharing this says a lot to me, because it just means that the market is right now, Shroom is under allocated, rather that there's not it's not crowded yet. So this looks good to me. Dracula, I mean, like I said, it's a meme. Yeah. I mean, I'll look at the chart, but my friend likes this. Chart looks, I mean, strong trend, right? You can't say anything negative about that. Series of higher highs and higher lows. This type of structure that we're seeing, right, if we're just looking at what's happening, it's forming a funnel, right? So it's tightening up on the way up. I would expect something like this to have a big pop and then to have a big dump, honestly. This is not building a structure that you want to see. If you just came from this, then yeah, that's great. Because you had the first sort of micro flip, big move out, like not a lot of volume or anything though, so it doesn't even look like that took much. Oh, there we go. But this kind of consolidation that's rising like that, it looks like people are, what this is market is getting very aggressive about getting in. So people are chasing this up right now. I think you're going to get a big spike, and you're probably going to get a big correction. I don't know anything about this other than that. These, these little things that are $10 million market cap pairs, like sometimes the charts don't even matter because someone could just come in and mark it up, and it's 5x up, and it's like the chart looked one way and someone just completely made that irrelevant. So this is a $900 million market cap already? What? Really? Let's see some. I'm gonna wrap this up soon, guys. What's going on with this? Maybe someone write in the chat what the market cap is. There we go. I think I need a new pair. I gotta put in a new pair of contacts. It's that time of the month. These are like, I think these have done their work. Time to put them down in the field. I don't know what's taken with this. Hopefully you guys aren't experiencing any lag. Oh, here we go. Oh, it's a $9 million market cap. Oh, okay. All right, so 900,000. So that's a dumb way to label it. It's just incorrect, actually. Right? Yeah. It's just not, that's confusing. So 9 million is like something like this is so tiny. Max supply, like from max supply, 14 million. Circulating 14. So I mean, the benefit of this is like it is a meme, so I don't know what the hell this is gonna do. But the fully diluted valuation, it is a current valuation essentially, right? Basically, the amount of supply is completely circulating right now. Let's look at some more information on this real quick. Etherscan, 2,000 holders. Huh. Yeah, I mean, the chart looks like it's going to pop up. That's all I could say. I just don't know if it's going to have the structure or the support to keep it up. But I don't know anything about it, man. So like these DeFi things, one release could be in the pipeline, and that creates a whole new level that price is now priced at. Okay. LTC. I'm gonna look at LTC. I'm gonna wrap it up. LTC, Litecoin. I wanted to talk about sushi real quick too. And sushi right now, I mean, this is another pair that is showing the chart against BTC. This only to me says that this correction, how shallow this is, right? I mean, we're looking at let me just fix this. We have that scaling issue because of that huge structure. This is a really bullish correction so far, right? So this to me looks like it's definitely about to be in price discovery again above its previous all-time high, right? It's always in price discovery, but this kind of consolidation, even in USD paired, I would expect sushi to be I don't want to say certain prices, but this is one of the ones that I'm not letting go. I could have been in this a lot earlier and held on, and I didn't. Same with everything though. SNX, Aave, like you should hold 90% of the time. If you're not actively trading it, like I'm trading BTC, I should have just held them. But sushi looks great right now. FTX, whatever they're doing with whatever is attached to FTX, I'm part of. So that's the way things will be moving forward. If Sam is attached to it, I'm attached to Sam. So this chart right now, nice spike of this low. You reclaimed a more local high, but that's, again, it's not a significant high within the structure. I think that your significant level to overtake for FTX, where it's clear that I just hit the speed button again, is right around 30. Where the idea is that, let me just clarify. Why am I saying that when this clearly means that it's going up either way? It's because right now, let's say you're taking a trade right now, you're longing into resistance. That's why. So that's why I sort of designate that level. It's not because I'm saying like, oh, you need this confirmation before you're long. It's because, oh, well, no, now we're at the level, so it pays to be mindful of that. You're sort of right in front of a wall. Now another area to buy would be, let's say if we reject from here and we revisit here and we end up reclaiming. Well, then yeah, you have a better area to define your risk for maybe a play that does, probably interact with this level again, but moves back up towards the high. Just looking to define better risk reward. Litecoin, and then I'll wrap it up. Yeah, and then I'm going to take my contacts out. Super Fabi. Bitcoin, and then Tether. I mean, this has been the case for a while now. It's just been shit against BTC. I think this is like the latest catch-up trade that people were expecting. That this is going to really catch up against BTC. It was like, if ETH made big moves, Litecoin is always going to make big moves too. It's the higher beta out of those three. But as you saw, ETH was a little bit too little too late, and I think the same thing happened with LTC. Just from a structural standpoint though, if you look at LTC, where it's currently sitting, it's in a more attractive area to get, to look for longs, honestly. Retesting previous major significant high going back to 2019. That is right around 152, right around 140, 152, this whole little area. We retested that already, but surely you could form some type of consolidation here that ends up leading to continuation. I think that it's in a better area though to define a trade, because locally you have this low that has retested, and this low is a pretty defining feature of this current trend. In that, if you lose this low, you're probably coming back down here, right? So if you lose, let's say 120s area, you're probably coming back down to double digits. So it's in a more attractive area to find a position compared to, again, where did my ETH chart go? Compared to, you know, ETH kind of is too, but this is the low so far. This is ETH still coming back to its all-time high after the first consolidation, right? Whereas LTC had the consolidation, had the pop up above, and it wasn't an all-time high, obviously, but it was the same high going back to the same high. So I think this it might be a little too late right now, though, just in the short term. Like, I don't know. I think that these probably, one thing to consider is this cycle it is going to be different than the last. There is this paradigm shift where there is adoption that's taking place with Bitcoin more than anything else. So I think that these will be correlated still. I would just always be mindful of where Bitcoin is and not expect that if Bitcoin is going through a larger correction or sideways range, that these are going to do anything but that, right? So, all right, guys, I think that kind of wraps it up. Yeah, I know I rub my eyes when they're like this, but it's the only way to like generate moisture, as weird as that sounds. My hands are washed. I just got out of the shower. So, yeah. All right, guys, I think that about does it. If you're unfamiliar with the channel, right, go ahead and subscribe. We do giveaways pretty often. Man, now at these Bitcoin prices, whoever won giveaways in the past, going back to last year, they made out pretty well. Just one last thing to look at Bitcoin before we wrap it up. So again, what was this area? Now that I turned off my quant tower, this area is a naked point of control from a composite. So all we're doing is basically saying that that area of balance right here, this area of congestion, the location where price currently is right now, and I'll just put the fixed profile on so you could see. Fixed range. The location where we're at right now is the point of control for those 2 days. So, and even if you go back to the day prior, right, we're still in the same spot. So again, why am I back here? That entire value area from this day initially, we have this day, and this day, and even with all three of those days, it's hard to see right now because of the coloring, but this is the point of control right here. So extending that forward, that's the area that is acting like a little bit of a speed bump right now. Now, short-term trade, I think, sets up, I mean, this is how I operate. If we take this high, right, if we take this high and sell that, I'll trade that up to these highs. Because, I mean, if we're back above this, I'm looking to trade back up to the value area high anyway. But that's very short-lived. For any kind of swing trade, I would much rather see that we're above these highs, right? And then keeping in mind right around 53.3, I think we said, or right around here, excuse me, 53.6. We have a naked point of control right in front of us. So that's another short-term scalp opportunity. But you could look at this like a larger swing trade back up to right around 57.5. So those are just some of the opportunities I see right now. That's that though, guys. I'm gonna wrap it up. I'm gonna go put some moisture in my eyes. It's too late. I need to go to bed. Okay, guys. Everyone have a fantastic evening. The next stream I'll be doing will be on, what's today? Today will be on Wednesday. So we'll do it again Wednesday. Probably the same time. That works for everybody.